Hey everyone, Nick here, looking at Amazon actually to address a point. If somebody sold covered calls and they got surprised by this rally, what can somebody do about it? First of all, the idea of a covered call, if I own shares in Amazon, I can sell some risk against them to lock in profits. So if it was down here and I said, you know what, I'm okay getting out of my shares at 2100, I would sell that call out in time, say to January, and collect a premium for it. So then what happens? Money goes into my account. That money is not mine until the bet is off. And if price rallies like it did and it bursts through 2100, I'm committed to selling my shares at 2100 even though it's now 2300 and change. So whoever paid for those calls is making the extra money. I make money up until 2100 and then I'm out thereafter. So if my cost basis is way below, this was a no-lose situation for me, except missed opportunity from 2100 to 2300, maybe. Why do I say maybe? Because there's still time on the clock. We could crash tomorrow and this comes right back down and nothing happened. It's not automatic. If I made the bet out to January, chances are they're not going to exercise on me yet. They usually wait closer to expiration. So meanwhile, that money I collected, let's say it was $100 per contract, now is $300. And so it looks like a big loss on my P&L for that trade. But really, there's no loss if I don't do anything. The only loss is the missed opportunity. So if my account was $100,000, it's now bigger from the rally, and I get to keep that that credit I collected, the premium I collected. So it was truly a no-lose situation. There might be some tax effects to it, but that depends on the person. So let's say, so what do? Let's say I changed my mind. Oh my God, I got myself into this pickle and I need to get out of it. There are ways I can mitigate this, but really I would wait out to see what's going to happen with price here. Amazon is at all-time highs. The markets are at all-time high nervousness, and shit's going to happen. So VIX is 40. That doesn't mean everything is cool. So the fact that Amazon is doing great is because everybody is doing so terrible. So the bearish thesis is working for Amazon here, but not by chance, because they put themselves in that position. So they made their own luck. It's a great company, unshortable. Luckily, if I sold covered calls, I wasn't shorting it. I was just being cautious, trying to make some more money. And in this case, it's probably going to cost me some missed opportunity. So how do I manage it? I can just wait and see if they take away my shares and then rebuy them. So then I miss the opportunity. I can buy some calls to stop the bleeding, but that's so super expensive. So it all depends on where my break-even point is. If I collected $100, that means my break-even is $2,100 plus 100, right? So I do have room. I don't need it to fall all the way back down. I just need it to fall below the missed opportunity. So if I collected $100, really my line in the sand is $100 above my strike that's going to get me out. So that I should keep that in perspective. Okay, so what kind of information can I get? Fundamentally, I say it's a cheap stock, but people freak out when I say it. It only sells at 4 times. Well, now it probably sells at 4 times sales. Just a couple weeks ago, it was selling at 3.4 times its sales. So what does that mean? It means it grows. It's not expensive. It's a growth stock. It grows like 25% every year, and this year is probably going to be better. So the earnings are coming. I wouldn't short it into the earnings, but it's hard to go long here for the short term. I mean, somebody just asked me, how do I go long for cheap? There's no way. So back on task. So I need to figure out, if I collected $100, where my point line in the sand is. If this is my line in the sand, I can just manage that. And I don't want to buy it back. Personally, I don't buy it back. I made the commitment, just let it go. And missed out on $100 in Amazon, big frickin' deal. That's the one way of looking at it. All right, so let me see if I can give some direction to the magnitude of this move. So it's hard to take anything from this one-day chart except to say that this was the neckline. I'm looking at it, and this was the gap up and the pivot point here. And I can visually see a line here. And if I look left, yep, I'm looking left. This is important. Whatever happened here is important. It carries back. Okay, so, and this is visually about half this rally. So falling back half is normal and it could happen. So I'm going to go to a 1 week to see if that gives me a little more intelligence. So this is about 5 years. So this is the half we were talking about, and looking back, look at that. This was the 2018 crash site. Okay, remember the crash in 2018 that started to the Christmas of Corona? This was the top. So higher lows, knocking on the roof, they busted through the roof. So usually they go about the distance. So I would say 2,000 to 400 points ish. So from here, 2,400 is a likely target. It came pretty close today. So it's in the zone of the target visually. But doesn't mean I short it there. It just means I'm trying to get a sense of how much pain is there, how much more upside there should be. It's within the target range. So if you have a couple of bad days in the market, this might revert lower. I wouldn't short it based on that. I'm just trying to gauge for somebody, like if I sold those covered calls, am I going to get some relief? And what's the relief? Where's the relief going to come from? If the VIX collapses, that is relief because everything is so expensive right now. If the VIX falls, then these premiums fall. So I collected, if I sold them during the VIX high, then my premiums were inflated. So even though the price is higher, my call might still get cheaper than what I sold it for because I collected it during the high VIX. So there's a lot to be done. But I wouldn't do anything today because today is the most expensive day to actually buy protection against a bearish bet. This was a bearish bet. But again, the person that sold this call hasn't lost any money. They lost opportunity. It looks red on the P&L because that one leg they sold is red, but it's really a covered call. So if it wasn't a covered call, then this is a different conversation, and I would want to stop the bleeding, and I would use shorter term calls for that maybe. I sell some puts against it to balance it out a little bit, but that opens some risk there. So there are some things to be done, but from the cover call perspective, the important line is the 2,000 clearly, and because visually it's what splits everything. So now that becomes my bogey. Then how much should I collect? If it's $100, then this is about where I expect some relief. If it falls to here, then I'm even Steven. So depends on the person, but I would need more details in order to help or give ideas as to what I would do. This is clearly another point of contention. It was a big failure today. They just busted right through it. So this week, what is this, weekly? Daily. Okay, so this week, this is insane. I mean, this is just, 13, 14% out. It's almost like Tesla. What is it? I think it's Tesla. All right, next signing out.